Good afternoon. Welcome to the OS and OE third quarter update. Let's get to it. Just a quick slide on returns. So far, pretty good year, beating the benchmark by a meaningful percentage, but down versus S&P 500, and that really relates to the tech stocks that have just soared this year. It's pulling up the S&P 500, and when the value stocks have really lagged tech stocks this year, so it's been a difficult year for value stocks. And these systematic strategies hold many cyclical stocks, so tough conditions ahead for cyclical stocks. So we're just in one of those environments where economically sensitive stocks have run into a little bit of trouble. Yeah, that being said, I'm pretty optimistic about the holdings, and here are the top 15 holdings for the various strategies. You're gonna see a lot of similar names, but in different weights. OE is more concentrated, so in general, we'll have higher weights, but some of the differences can come about from timing. The OE is going to be have a little more turnover, a little more trading. OS is a little more buy and hold, so sometimes, yeah, that creates some differences. Talk a little bit about some of the top holdings. Hewlett Packard Enterprise. I think it's got a lot more going on under the hood than is appreciated. A lot of people think of them as just sort of enterprise compute, and that's still a big part of their business, and it is in stagnant part of their business. But they've one of the best WLAN networking businesses. They actually are an AI and high performance computing play. Some prowess there that's underappreciated. There's other assets in the mix too. They've done a nice job transitioning to hybrid cloud. So when you really get started analyzing it, there's some more value than I think meets the eye. Suzano, Brazilian pulp producer, largest low-cost pulp producer in the world. Actually have another large project about to come online in 2024 that's going to make them an even lower cost pulp producer. They're doing a nice job pushing their low cost position to press into other areas like fluff pulp and even clothing, and so they are I think a really good company that trades at a reasonable price, and so that's why we own Suzano. I also don't think the pulp markets are in bad shape. I think there's actually a positive dynamic to the pulp markets. Nokia, a lot of people think of base stations and sort of stagnant growth in base stations. That is true, but there are a lot of prowess at Nokia. I mean, they have the leading position in carrier routing, looking to sort of get into switching and routing closer to the data center. That's an ongoing focus, but they are strong in carrier routing. Their optical business is back and doing well. Obviously, the licensing business is huge. A lot of innovation over the years has led to a steady stream of IP income. Access business is pretty strong. So Nokia's got a lot going on. Good balance sheet too. So all these holdings really, that dynamic plays out. We start really getting into them and analyzing their divisions, and sum of parts is generally greater than the company's trading for. And I would say that applies for a lot on this list. So we'll leave it at that and move on. The OS does invest in fixed income. Usually that's an afterthought, but it's moved up over 16% into 3Q, and that's gotten even higher here in 4Q. But it doesn't really temper risk all that much. 2/3 of that fixed income is high yield, and it's high yield that is not super aggressive, but there's some credit risk associated with some of the high yields, talking yields over 10%. So there is a definite risk component to the fixed income allocation, but there's also some IG corporates, governments, RMBS, and municipals in the mix. So it's the fixed income is not extremely risky, but it doesn't have that sort of dynamic where lowers the risk meaningfully for the strategy. International allocation, it's very high. Number of reasons for that, just really viewpoint on economic conditions abroad versus the US and valuations abroad versus the US. Um, it's skewed a little bit by Canadian holdings, it's very sensitive to North American conditions, and Canadian here is classified as international, so that skews it a little bit. China holdings, there's four names, Alibaba and Baidu, company in solar called Daku, and China Solar, if you want to consider that one Chinese. Uh, there's some a company like Daku, it's really an arbitrage play. Their stock listing in China values them much higher than their stock listing in the US, and they're going to be able to close that gap in 2024. It also trades at an extremely low valuation due to you know the fallout in solar, and also uh, the fallout in Chinese stocks that's occurring. So, Alibaba and Baidu are two of the bigger companies in China. I think they eventually will have stock prices that rise. They're innovative, cash flow, cash flow strong companies. I mean, the broader allocation is a lot of multinationals. I have some listed down there: Suzano, Nokia, Mitsubishi Electric, Hitachi, Bayer, Embraer, Sanofi. I mean, the two Japanese holdings, Mitsubishi Electric and Hitachi. A lot of business in Asia and in Japan in particular, but they're all over. Actually, Japanese stocks have worked pretty well this year. There's been a rally for a number of reasons in Japan. A company like Mitsubishi Electric, it's a pretty innovative company. They have strong business in industrial automation, HVAC. Their HVAC business is underappreciated. This actually just recently had some really good innovation there. So, um, good multinationals in Japan, and it diversifies the strategy. And so I think some of the stocks can work, to put it bluntly. Even if we head into a recession, I think some of these stocks can hang in there, and then if we do come out of a recession, can rise sharply. As been stated before, it's sort of a 2 to 3 year horizon for the OENOS. So, I mean, I think that's the appropriate sort of midterm, not looking out real long, but not looking out real short. Actually, I think one of the best opportunities in stocks is when the next 6 months looks poor for a company, because the market seems to be focused on the next 6 months. But if you're looking out 2 years, you don't have to look out be super long, but if you're looking out 2 years, you could find some gems that are going through a tough time, but there's very good chance when they get through that tough time that their margins and business will return to a much better state. So I look at a lot of companies like that, and I think a lot of them are already pricing in recessionary conditions, and sometimes those companies are the ones that actually hold up when a recession occurs, or sell off, have a shallow sell off, and can come snapping back when the economy is doing okay. But I do think it's going to be a rough stretch next 6 months or so. So sort of manage that the best you can, and really optimism here is as we get closer to 2025. Leave it at that.